point, that trying to make sure that you have an alignment in your viewpoint that with the target investor, the target company, that what they're reporting to you is trying to achieve a similar outcome. When you think about ESG, the environmental and governance areas have had probably the most work done in this space, because they're probably the most clear in what carbon usage maybe, or governance, what the structure of the board, those kind of things. Can be a little more, there's not as much leeway interpretation, but when you get into some of the more social aspects of it, it becomes a little bit more problematic, and what I may define as one view may not be the defined view of one company or the other company, or if you're using a data provider, what they're collecting, and does everybody agree on that? And so that we'll talk about data probably a lot today, but that's really important there, to make sure that we're all trying to collect and evaluate and measure the same thing, and that's been a real challenge. The other one is, I talk about relevancy, but I also think transparency is really important. I think that is an area that is a challenge that all impact investors really face, is a company willing to be transparent on what consider might be a risk, but also the reality is that trust and transparency is a positive attribute if they really are open and have that dialogue. It promotes a conversation that really helps move the organization in a positive direction. We've been so focused historically in the ESG space on negative attributes that I think companies are worried that, and their engagement has been maybe on the negative side, that this engagement with investors and other third-party provider NGOs and organizations reporting on the positive side, that they're hesitant to communicate the positive things that are going on if they might be lacking relative to peers. So they're doing something positive, but maybe it's early days, and then they look, quote, poor relative to it, but they're making first steps. The companies sometimes aren't open about that, but that's important to know they are doing that. And if they're transparent about it, then that gives us the insight that, they're doing something, let's continue to encourage that and promote that and that. So I think that transparency is a big stumbling block, especially I think with Sarbanes-Oxley and other types of regulatory legislative stuff, that if you don't comply, it's very negative. So I think we've got to move beyond that.